I know private credit's not your wheelhouse, but what we're really talking about is liquidity. The rise of private credit's all about just finding funding. What is the liquidity situation right now? What's the funding situation when we're talking about venture capital and private equity?
Sure. So, Frank, it's clear that the macroeconomic has been uncertain from a fundraising perspective, whether you are a general partner or you're an entrepreneur raising capital. But you're also seeing that investors are seeking liquidity, alternative, not just from an IPO or M&A perspective, but also from a secondary perspective as well. You're seeing in 2025, secondaries rise to 60 billion versus 50 billion last year. And so I think investors will have to be a bit diversified in terms of how they think about liquidity, particularly for those early stage investors.
I want to go back to that stat you were just talking about. So right now, the venture secondary market is at 60 billion in Q1 of 2025, but that's a 20% increase from Q4 of 2024. So what's going on? Is it an issue with exits that investors are trying to get their money out of some of these investments because we're not seeing as many IPOs?
Yeah. So you're not seeing as many IPOs, but what you are seeing is from entrepreneurs that are building companies in sectors like healthcare and fintech. It's requiring, the sales cycle in some cases are fairly long, and so there's lack of a pathway or to see liquidity event for the long haul, and so investors and you're seeing LPs rebalance as they think about finding new ways for liquidity events as regards to their.
All right, so this is interesting. According to your data, 60% of new VC funds are focused on a few areas. One's deep tech, AI, fintech, and the last one's healthcare.
Yeah.
So in the public markets, healthcare stocks have seen a lot of disruption, but people seem to be putting money when it comes to healthcare and the venture capital space. What areas are they putting money into? Because the healthcare stocks in the public market are very disrupted by the administration and a lot of different changes.
Yeah. What we're seeing is that you have these defensible sectors. You find that entrepreneurs and investors are being rewarded by resilience. And when you see in the healthcare sector particularly, not just those that require FDA approval, but also those that are non-clinical areas like access and affordability of care, or mental health or maternal health, like Saving Starlings, a DC-based maternal health platform. And then you also have SDOH, social determinants of health, areas like food security and transportation. And so those are areas that yield poor health outcomes as it relates to.
So you're using some technical terms, but it sounds like the theme here is that areas of healthcare that don't require approval at the federal government level.
Exactly. So these are non-clinical innovations that are seeing a great deal of investments going to those subcategories.